Binance declines the deal to acquire FTX, Bitcoin rallies for CPI, and Sam speaks on why FTX didn't have enough money. This is your Altcoin Buzz news. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. As always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Now, let's get into the news. Bitcoin has had a bit of a recovery this morning as it rallied from 16,500 to over 17,500. This morning, the CPI numbers came out, and we were predicting a 7.9% year-on-year inflation rate, with last month being 8.3%. But in a turn of events, the number came out better than expected at 7.7%. The market turned green as it seemed inflation is coming down month to month, possibly resulting in lesser tightening by the Fed next month. While this may be a relief rally, the greater market conditions are still not looking great. Bitcoin miners may be the next trigger for Bitcoin price to crash as outflows hit multi-month highs. As Bitcoin fell 20% in just days, miners began operating at higher cost than what they make on fees earned, resulting in more mining rigs becoming idle. We also saw yesterday over 5,400 Bitcoin leave miner wallets, increasing sell pressure. If we see more miner capitulation and bankruptcies by these mining companies, they would be forced to sell their Bitcoin and the price would fall even faster. The small silver lining to this is that when mining companies capitulate, it has previously marked the bottom of the market, which everyone is very much looking forward to. So keep a close eye on the top mining companies listed on the Nasdaq, such as Marathon Digital, Core Scientific, Hut 8, and Riot. Yesterday, in a turn of events, news broke that only after a day of due diligence, Binance has decided to not go through with the FTX acquisition. We may now start to see stricter regulation in the crypto space. After the FTX collapse, Gary Gensler, chair of the SEC, warns of a crypto crackdown following the spectacular surprise collapse of the digital asset exchange FTX. He indicated on Wednesday that people's tolerance for the Bitcoin market is wearing thin. It's a wild west with a lack of disclosure, a lot of leverage, and a lot of interconnectedness. Over the last 18 months, Gensler has become one of Washington's harshest critics of the crypto market. He has argued that much of the crypto universe is built on securities that should be regulated by the SEC and that intermediaries like crypto exchanges need to register with the agency. The crypto industry has largely refused, instead lobbying Congress to enact a whole new regulatory regime for digital assets. With FTX's downfall still playing out in real time, Gensler indicated yesterday that enforcement is likely to ramp up soon. There are now reports that the SEC is looking into FTX and how they handled users' funds. Justin Sun, founder of Tron, has gotten into the FTX mix lately as he came out saying that Tron has resumed trading on FTX and they're working on withdrawals. This caused a surge in the price of Tron on FTX as it seemed the only way for users to get their money out. Many are not fans of Justin, claiming whatever Justin Sun is doing will end up horribly for anyone involved. People are converting their funds to TRX on FTX at 10x the value of other exchanges. In a leaked Slack message from Sam Bankman-Fried to his team, Sam mentioned their plan for next week will be to conduct a raise. Their goal is to first do right by customers, and as part of the potential raise, they're in talks with Justin Sun. Sam has reportedly said he needs up to $8 billion in a raise, as reports suggest that FTX saw around $6 billion in withdrawals leading up to November 8th. Earlier today, Sam came out with a thread talking about how he messed up and his number one priority is doing right by customers. They're in talks with a number of people who could help, and if that happens, all funds will go straight to users and after that, investors. He goes on to say Alameda Research is winding down trading and won't be trading on FTX anymore. In a recent circulating video from last year, Sam tells Congress the reason for the 2008 financial crisis and that crypto is different.
If you look at what precipitated some of the 2008 financial crisis, you saw a number of bilateral, bespoke, non-reported transactions happening between financial counterparties, which then got repackaged and re-leveraged again and again and again. If you compare that to what happens on FTX or other major cryptocurrency venues today, there is complete transparency about the full open interest. There is complete transparency about the positions that are held.
Sam's trading firm Alameda Research reportedly suffered major losses during the Three Arrows Capital collapse in May. Bankman then had to prop up Alameda with $4 billion in FTX funds secured by its FTT token, and a portion of those FTX funds were customer deposits. Sam didn't tell any other FTX executives as he was afraid it would leak. Sam told an investor this week that Alameda owes FTX about $10 billion. FTX had extended loans to Alameda using money that customers had deposited on the exchange for trading purposes. All in all, FTX had $16 billion in customer assets and lent more than half of that to its sister company, Alameda. FTX had multiple raises, most recently its Series C, where it was valued at $32 billion to now being worth just $1. Crypto lender Nexo dodged a bullet as they withdrew over $219 million from FTX the days leading up to the collapse. However, some weren't as lucky. Sequoia Capital, being one of the early investors in FTX, put out a statement saying they've marked down their $213 million investment in FTX as a loss at $0. Sequoia also reassures its partners that writing off the FTX investment wouldn't have an impact on the fund as it accounted for less than 3% of the capital. Other crypto companies that have exposure to FTX or Alameda to be on the lookout for are as follows. Amber Group is said to have 10% of its funds on FTX. Crypto.com has less than 10 million and says they're fine without it. Galaxy Digital had $76 million exposure to FTX with $47.5 million in the withdrawal process. Multicoin Capital says they had 10% of assets under management still pending withdrawal. Selene Capital and Wintermute also having funds locked, but it's not the end of the world for them. In the coming weeks, we will see the effects trickle out from exchanges or lending firms that are largely affected by this. So if you have crypto, make sure you're in control of it and be careful of holding funds on other exchanges. That's it for your Altcoin Buzz News Update. I'm your host, Cody Buffington. Thanks for watching.